Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 8th of May, 2020. This is episode number 1751. Thanks for joining me today on non-farm payroll slash unemployment day here in the U.S. Derivatives trading involves substantial risk of losses, not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on sentiment, we're gapping higher in the indices following a non-farm payrolls report, which was very, very bleak. However, the markets don't trade the actual number, they trade the relative expectation. It is slightly less bleak than expected. For those who don't know, and I'm not sure why you don't, the market expected the consensus was 22 million jobs lost in April. 22 million, just breathtaking. 22 million jobs lost in April. The actual came in at 20.5 million lost. 20.5 million lost. And the unemployment rate was expected. The consensus was at 16%. 16%. The prior in March, it was 4.4%. It's quadrupled. 16%. However, the actual came in at 14.7. Now, here's the trick. The trick, the trick here is what this number will get revised to for the May number in June, in the first Friday of June. We need to pay attention to that. The Department of Labor prepares this, and we need to, there are revisions that take place, and we need to make sure that this number is in line with what it is now, as opposed to a number that's a little bit better and then it gets revised worse next month. Anyway, so non-farm payrolls and unemployment caused the markets to soar. To soar a little bit. The S&P had an SOC, or the scene of crime, on this print, on this release at 2902 and a quarter, 2902 and a quarter, and pushed to around 2917. Or actually, yeah, 2917 on this release, 2918 or so. And is trading sideways still, currently trading at 2914. We're still above that 2900 level in the S&Ps, which was expected. I talked about this on Monday, Tuesday. This morning, crude has also taken a pop higher, up 3%, trading at 24.27, up 72 cents. The Russell is the leader in the indices, up 23 points or 1.8%. The DAX is up 152 points or 1.42%. The Dow is up 288 points. The S&P is up 34 points. Again, we are gapping up this morning. Gap rules apply again. Looking at the calendar, we are expecting wholesale inventories at 10 o'clock. Expecting negative 1%. The prior is negative 0.6%. And that wraps up the week, a very busy week this week. And that's where we stand in terms of scheduled events. Balance of trade came in strong for Germany this morning, hence partly why the DAX is as strong as it is. Next week is relatively busy. We have numbers, critical numbers sprinkled throughout the week. We'll talk about that on Monday. Here's what I expected yesterday versus what we got in our review segment. Without review, we don't really learn anything. Yesterday I was expecting, the market was opening at about 28.77 or so against the overnight point of control, very close to the overnight high of 81.5, which was also one tick lower than the prior day's low. So the expectation is that the market's likely to pull back a little bit. I was looking for it to pull back to 28.60 and then mount a push to 2900, 2902 being the first test, and then potentially 2907 as you see here and here. The secondary is we push higher immediately. and I outlined the areas that are likely to see resistance 28.91, 29.02, and then look for it to drop back down to 28.60, and even further if that's in it. Here's what actually happened. We had an open auction in the morning, sideways. We finally break. We did push up against the overnight high twice. We broke the prior session's high, and we kind of stair stepped our way to 28.86. We finally get that impulse down. So the expectation is it's likely to pull back to mid right in here and continue lower, but it did not do that. It had a very small swing, pushes back up above the opening swing, below the opening swing, above the opening swing, and then finally extends to the upside to 28.95. 28.95 before it rolls over and comes back in. I found yesterday to be quite noisy, and I found it to be not an easy trade. It was swinging both ways, and the delta was going with price yesterday, uh, confirming price. But overall, it was quite noisy, and it was more of a scalpy market, relatively scalpy market. And you could see that in the profile where it's just there's price discovery across the board with a weak low left behind, and a neutral day. We broke the IB high up here. We broke the IB low down here. Neutral day. It's a neutral normal day, and we finished right on top of that 2880. The point of control, VWAP, and the mid all on top of each other. A very balanced day after exploring higher. And it just stopped short, 5 points short of getting into the 2900 before sellers came in. So yesterday, maybe it's just me, but yesterday I found it to be a little bit more difficult to read overall. And then overnight, it opens up and it immediately starts squeezing higher. So that's where we stand. We're up here this morning, 29.12. 29.12 in a gap from yesterday's high. So we have a gap zone up here this morning. Okay. Um, Overnight session. Here it is. Let's change the scale a little bit. It's expanded. Overnight session opens up and immediately it's on this kind of push higher. It flattens out. Let me correct this. It flattens out around when Europe opens. Europe takes it back, as it very often does, pulls back right to the mid on the tick, and then moves into the point of control, which was formed using this action back here and has been consolidating. Another touch of mid right there, 29.0150, and we're holding sideways in what is a P-shaped profile overnight on pretty decent volume. Very bullish overnight session, and with it comes the delta. So overall, overnight inventories is long. Pretty much everybody's long coming into the opening session relative to yesterday's close, which is this orange line, which is also the open, and we're holding steady up here. If we start to give up this 2901, 2900, we may see it very quickly come back towards 2880 for 20 points. Otherwise, it is very likely to push and continue to squeeze higher. We're above the key targets that I had up on the 2900. We're kind of testing things in a weird way in that we've pushed through that 2907 and 2920, and we're holding steady here. So overnight, very, very bullish. Let's take a look at Bookmap. At Bookmap, the big picture in the overnight is here we reopen at 5 o'clock my time here in Chicago, and immediately we see buying delta coming in, these towers, these green towers, buying delta coming in pretty strong right from the get-go as we continue, as the market just rallies and rallies and rallies. It lifts whatever liquidity is available, ends up faltering up here in the 29.23 area before pulling back to what is ahead of the 2900. This liquidity here, it ends up pulling back to it, bounces back up to this zipper. There's the zipper bottom right there. And then we get the non-farm payrolls. When we zoom into the non-farm payrolls, we see that it was kind of falling, non-farm payrolls falling, falling, falling. And then at 2902.25, we get the number, and we immediately push up to about 17 is the non-farm payrolls. We take a lot of that back. We take more than 50% back. It looked exhausted to me. It was an opportunity to get short, and then from there, it's just been consolidating sideways in like a kind of a wide flag pattern. Overall, looking at the lay of the land here, we have liquidity on both sides. To me, today is one of those days. Unfortunately, non-farm payrolls tends, although lately um, it's behaved a little differently than expected. It tends to be a correction or an adjustment right at the open. Marking on open orders, the number gets digested through the equities market, affecting the SPX, which affects the ES, and then it goes kind of dull after 2 hours or right at the European close, 10:30 Central, 11:30 Eastern. And so today, though, we see liquidity on both ends. On both ends, 28.90. Remember, 28.80 would be the target to the downside. That's yesterday's close, with a fair amount of liquidity just above the market here, all steady. This tells me that there's an expectation that the market is likely to push higher. These are offers, and remember, people who buy generally, big money that buys generally doesn't show that it wants to buy. You don't, when I started trading equities as a So's Bandit, Nasdaq equities as a So's Bandit, one of the biggest edges was, the not many people had level two at that point, and they would just come in, fund or whatever would come in and say, I want to buy, 3 million microstock and Microsoft stock, and it was just put a bid there, and it would just move it up, move it up, and of course anybody who has level two could see that, could front run it, and then sell back to that liquidity to that size as it was moving up the book. It was really quite amazing that that was happening. Now there are dark pools. There are many spreads. There's ETFs that you can spread into and all that stuff. It's a lot more obscure, but in general, people don't show their size. What they do show more often than not is once they're in, they have their targets, right? They go to bed and they have their targets out there, and that's the liquidity that we see. I believe, now there's nothing substantiating this, it's my opinion, when we see this, and that's why there's an old saying in our business that the market tends to move towards liquidity. It's not that the market tends to move towards liquidity as if that liquidity acts like a big giant magnet or a center of gravity and pulling things towards it. It's that the trend is in the direction of that liquidity, and market participants, potentially smart money, is sitting there offering that liquidity because they have orders to get out, and that their expectation is the market is likely to move in that direction. Okay, when we see a lot of liquidity above or below, it tells us that the market's positioned both ways. There are relative expectation that the market is likely to move down or to push higher. This is why on days when it's blank down here, it's just black, and there are just offers up above, I'm leaning more to the long side, looking for the market to test those areas. This is pure order flow, has nothing to do with the auction or anything like that. This is just something I carry over from my stock days. Okay. So let's take a look at what we're expecting for today. I want to remind everyone that it is Friday. Please hit the like button if you're on YouTube. Please hit that like button, a thumbs up button that helps others find the channel. Here's what we're expecting for today. Lots of action going on here. You can see these balance zones with these yellow profiles called microcomposites, and we are above. What are we trading against? So as we look to the left, we see that we're trading against this area at the end of the month. We ran up at the end of April, and we've pushed into 29.50 with a top at 29.47 and a quarter. There goes the cat again. Um, and man, I can't wait till this thing is over and I can go to my office downtown. Um, and we are up against what? We're up against this composite high volume node from the end of April. That's what we're trading against currently. Um, and this is where we are currently here at 2905. This is where 2907 comes from. This is the area I expected to see consolidation and flattening. We're opening up against that. So this morning, the expectation is, since we are in this high volume node back here, the expectation is an open auction that's likely to push both ways. I'm looking for that high to be taken out and a potential push into this 29.30-31 area before the market comes right back and finishes on the high volume node on the composite. I'm looking for it to not fill in the gap down here. It may push down a little bit to 29.02. Remember, there's the century figure below us, so it could push down into the century figure to test from above, but overall, uh, this is the expectation for scenario one, that we would continue to squeeze higher. The secondary is an open auction that pushes higher, looking for that high again, consolidate, and then squeeze down, consolidate at 2907, and then push into and through this 2895 from yesterday, poke into the prior range, and then consolidate into here. So what am I going to do on the open today? On the open, I'm looking for the quality of the push higher, and I do so through, let me see if I can show you my volume scope chart. Yeah, I'm doing that by looking at how is it moving up. So when we see things like this, as we're pushing higher, the only way that liquidity, that those trades could happen on this particular bar. This is a quarter by 12 point and figure chart. As it pushes higher, I'm looking for this kind of action, and what this shows is the market is trying to push higher, but it's being confronted with liquidity that's coming in, and that's why there's volume there. Without somebody confronting that lifting and offering into it, or trading against it, this kind of pattern won't happen. So as we open, I'm looking for it to create one of these long, thin bars, and then come into a higher bar that actually has a wide footprint on it. This against what you saw on Bookmap with the heat map. This gives me a high confidence area to fade. It tells me that it's not likely to continue higher, and now it's relatively safe, or it's a well-defined risk proposition to get short and look for the rotation back down. That's what I'm looking for on that second scenario, above the overnight high, which is marked on my chart right here, 29.23. Okay, and once it does, I'm going to follow the pattern shown of where the expected next key area is. I'll leave you with that, and I want to remind you that I did launch a new brokerage, a new futures brokerage on April 2nd. We've had just an outstanding month. The support has been great. And I want to make sure that everybody knows that edgeclear.com is up and running. and it's run by a team of award-winning brokers. I'm looking for your support. I'd like this to work out. There's a big plan for this going forward in terms of technology development for traders. And I'm looking to create the same tools as we use in prop shops and things like that. Not only are we extremely competitive on micro ES, NQ, YM, and Russell um, commissions, we are also very competitive for all other electronic products as well. Although, our 98 cent all in, including the Rhythmic or CQG Web API platform, that price is really tough to beat in the market. So I invite you to go to edgeclear.com and hit the chat box, or to send us an email at newaccounts@edgeclear.com and let us know what you need. I do appreciate your support. Thank you and have a great weekend. Remember, it's Friday. Don't go into the weekend with a big hole in your pocket by defending a trade that is not worth defending. Every trade is a Tinder encounter, not a marriage. Let it be that way. Take care.
So there's some auto news there, following on from Toyota saying they're to restart two more European manufacturing plants on May the 11th. The Financial Times reporting here that Toyota is to reopen its UK engine plant next week.